Hey, good morning, everybody. Glad that you were able to join us, getting ready to go on with Dave here just in a few moments. But I did want to, after coming back from Ed Slot last week, we did have a speaker there that talked a lot about Social Security, and it just made me think about how Social Security is going to be such a vital part of all of our retirement planning. And so I want to offer our free report again on Social Security choices that you're going to have to make as you head into retirement and what those are going to look like. And so our free report that we've put together, all you have to do is text the word security to 863-285-3815. That's right. Just text the word security to 863-285-3815 to get your free report about Social Security and some of the choices you're going to have to make as you head into retirement. Dave will be with us in just a moment.
FM Andy Grammer there. Good morning. 8:38. That's 22 before 9. We always check in on your money and find out what's going on Wall Street this time in the morning. And we're going to head downtown to the offices of Statler Financial Services, where Phillip Statler is standing by. Phillip, the trade talks continue to dominate it. I got Dow futures down after Trump says China broke the deal. Well, even the neutral parties are saying there's going to be one tough day or two of negotiations ahead of us, isn't it?
Yeah, it is. I mean, I got to say, yesterday, we kind of ended up mixed with the Dow getting in the green, the other two off slightly, not terribly down, but this morning again, we're seeing downward pressure on all the indexes, and continues to worsen as the morning goes on.
Lord, did you ever think that we'd ever find ourselves tracking financial market fortunes off of Twitter, determining what's going to happen? I mean, that my head is still having trouble getting around that, but that's really where it's at. President Trump tweets that China's breaking the deal, the negotiations are not going well, and the stock market tanks pre-market, and I was actually feeling optimistic at the end of the day yesterday.
Yeah, it is communication, because we have such availability of getting our word out. It definitely affects our markets a lot faster than back in the old days.
Absolutely. It used to be, it was almost rumor mill control. Now all of a sudden we're getting it instantaneously right out of the horse's mouth. Start out the morning with some macro news out of the government, neither of which ought to really excite the markets all that terribly much. First-time jobless claims, the usual Thursday report comes out. It was an improvement over last week, 228,000 claims, which 5 years ago we'd throw a party over, but it actually even disappointed some of the analysts. They were expecting even better, I gather.
Well, it was. We expected initial claims to come in at 219. I think I never saw the number. I think you told me 228, 229,000. So, not a huge miss. Definitely, different than what we've seen the last couple of months.
Oh yeah, nice to see a trend downward. Anyway, I mean we're still abnormally low on the number, but we're kind of getting used to those low numbers. No expectations are for even more abnormally low than we're actually reporting, which kind of comes out of that Brave New World heading again, too, doesn't it?
Yeah, it really does. So it's. I mean, let's face it. Our employment situation is still in very good shape. We cannot complain about our unemployment rate right now, or the amount of jobs that we seem to have out there, because there's not necessarily a lack of jobs, but there's a lack of people to put in the right job.
Yeah, absolutely. And when you get down to 228,000, you're really into that range. Under 250, you're pretty much into the natural sifting and winnowing of the employment market as it goes. The fact that it's running well under the 250 mark means that a lot of folks are hanging on to jobs because, well, they're pretty good right now and they don't really want to move. And that's always good news. The other bit of macro news that came out was producer inflation. And that also was a little on the strange side, up 0.2% last month on producer prices, which I gather was what the market expected. But the core, once you get rid of elective stuff like, energy and food, just elective stuff we don't really need, that was up a little bit more than they expected, 0.4%. So once again, a minor disappointment, probably not enough to move the market all that much.
Well, you might call it piling on with the trade stuff, but it's not going to be enough to really add that much. Let's face it, the traders are more concerned about trade and probably not the big picture things right now.
Yeah, pretty good chance they're probably not going to be watching the individual stocks that much either, but there's a whole pile of them as we're right into the middle of earnings season with a lot of household words telling the world how they did in the last quarter, aren't they?
Oh man, it's there is a lot of them today that are household names, or at least should be household names when it comes to some of the companies out there. We got Tapestry, which I didn't recognize that name. If it didn't tell me it was a coach, the former coach purse guys, they did well. They beat by a penny a share. Revenue was in line with expectations, and one of the key indicators for retail is how did the same store sale do, and they were able to go up 0.1% more than what was expected on their same store comparable sales. So good things there for Tapestry. The stockholders are really liking it. The traders are really liking it because it's trading up almost 17% this morning. Now, obviously, it's coming off of almost a 52-week low yesterday, but still up almost 17% this morning.
I was going to say there had to be a reason why they were going that big over what is not a monster beat on any of the macros, but coming off a monster low yesterday, okay, fine, I understand a big uptick, but that sounds like party time looking at 17% increases in pre-market.
Yeah, it does. And Tapestry is, let's face it, that's a higher end product. So it takes some discretionary money to be able to go and spend that. And so along with things like cruise travel. So we go to Norwegian Cruise Lines reported, and they came in 12 cents ahead of estimates. They made 83 cents a share for the quarter. Revenue was top the forecast, and they say that they're getting a lot of global demand for their cruises, and so it's able to support their pricing, which is a good thing when it comes to travel. Now they're up about 2% this morning, and they're getting, they're within $1.50 of their 52-week high.
Those are two good consumer confidence readings: luxury leather goods and purses, and cruises on the high end of the cruise market as well. That all adds up to a fairly good consumer confidence number, doesn't it?
It really does, and we'll take one step further as far as discretionary numbers and being able to travel. And that's Walt Disney. Walt Disney came in and they beat estimates by 3 cents a share. They beat forecast on revenue. Remember, they went through this bidding war for 21st Century Fox and their assets, and they won. So they finally that whole purchase is concluded, and so they also saw big growth from the majority control they have in Hulu services. And of course, they're getting ready for their own streaming service coming out later this year, and they're not up robustly, but they're still up 1/3% this morning.
I'd forgotten that Disney has a control of Hulu to go along with their own service. No wonder everybody's so excited about that.
Yeah, and so then we had Fox, who just got rid of 21st Century Fox, and they beat by 9 cents a share. Their revenue top forecast. Now they're a standalone company. They've been able to grow in the cable and broadcast TV businesses, and they're trading up 4.5% this morning.
Not bad. Have you got any bad news? It sounds to me like everything's coming up roses so far on the earnings reports.
So we do have a couple bad spots here. Now, Etsy, which had a good quarter, they were up 10 cents a share above estimates, but they've cut back some of their marketing spending. Gross merchandise was in line, but they're trading down about 6.5% this morning before the market opens up. And my big loser today, Stamps.com. Stamps.com. They beat earnings by 16 cents a share. Revenue beat forecast, but they are making some major changes. They lowered their full year guidance. They've had cancellations, and they've had to renegotiate contracts between the U.S. Postal Service and certain resellers. They actually ended their partnership with the Postal Service earlier this year. And so they're trading down almost 48% this morning. They closed, just to show you, they closed yesterday at $83.39 a share. Right now they're at $43.36 a share.
Kind of begs the question, because I haven't followed them that much. How can a company called Stamps.com survive without a partnership with the Postal Service?
Yeah, it makes you wonder, doesn't it? And obviously, I think the traders are asking the same question.
Yeah, it's an intuitive question that really begs an answer, and their guidance ought to be really interesting to read that report in detail.
Yeah, I think you're right. It's one of those things that yeah, are they going to be able to weather through all this? That'll be interesting to see too.
Without a doubt. Setting the table for the morning, as mentioned earlier, was kind of a mixed day domestically at Wall Street yesterday. Dow managed to eke out a basically flat day, up about 2.25. NASDAQ continued to fall, which doesn't surprise much since they've got so much dealings across the Pacific Ocean. A lot of their stocks ended up still getting hit by the trade concerns. They were down 20. Standard & Poor's was down a little over $4 overnight after President Trump's tweet. The Asian markets just absolutely fell like rocks. Hong Kong was down by 2.5%. Shanghai down by 1.5%, and the Asian rim just absolutely went south in a hurry. 45 minutes before the open. How far south are we going, Phillip?
So we have. It's not good, Dave. It's not as bad as we've seen on Monday when we were down 400 or 500 points. But the Dow's down about 0.7%, $177 this morning. S&P 500 is down 22, about 0.75%. NASDAQ's down 1%, $76. We've got gold up just a tad, up $1.20 an ounce. And we got silver down about 11 cents an ounce. So neither one of those are really making much headway. And we've got crude oil down 0.6% from where it closed yesterday, $61.75. And then the crude inventory came in yesterday. And I believe if I'm looking at the numbers right, it was down 4% from what they expected.
I was going to say that number that we're looking at this morning, 61.75, I think that's actually up a little from yesterday morning when we talked, but still inside that trading range between 61 and 62. So I'm almost getting used to that, almost like I'm getting used to 175-point swings on the Dow.
Yeah, exactly. It is. We just can't get below that 60 number back into the 50s. That seems to be kind of a buffer there that we just can't get through.
Yep. Overseas markets, as mentioned, Asian rim markets pretty much sold like chiclets. Europe responded in kind. They're not as bad. The German markets are down by the better part of 1% halfway through their day. English markets are running about 1/3% soft. France is running about 1% down. They're not happy with the trade war either. Phillip, somebody need to get some reaction on retirement, making it work, keeping it secure. This is a great time to get advice from a neutral party, and I'll bet you're ready to help out. How do I find you?
Absolutely, Dave. I feel like right now is definitely a good time to make sure that you don't have too much risk in your portfolio. And to do that, all you have to do is call our office, 863-382-0037. Ask for our X-ray appointment where we'll X-ray your current portfolio and determine how much risk is there. Follow us online at statlerfinancial.com. Follow us on Facebook. Like our page there at Statler Financial Services. And then, of course, join us every weekend, Dave, for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And streaming online at newstalk730am.com. You can catch all the great programs, including Phillip's, online on stream now. Phillip, thank you so much. We'll catch you tomorrow morning. Let's cross our fingers for peace in the valley on the trade talks, right?
All right, man. Thank you. Talk to you tomorrow.
Take care, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Who will be your...
Hey, again, I want to thank you for joining us today for our Dave and Phil show in the morning. It's a lot going on, a lot of stuff going on. We got the trade talks coming up tomorrow. But again, I want to remind you that if you are getting within 10 years of retirement, it's important that you start thinking about Social Security and what is your strategy, and are you sure you're using the right strategy? So all you have to do to get our free report on Social Security choices is text the word security to 863-285-3815. I know a lot of you out there were concerned about if Social Security is even going to be here. This report will answer some of those questions. Text the word security to 863-285-3815. 3815. Hey, I want to thank you for joining us today. I look forward to speaking with you tomorrow.